What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. Now, first things first, I apologize for the price being different on my screen. I did have to record this video earlier on in the day because I have some prior commitments that I need to attend to throughout the remainder of this day, but the information is going to stay the same, so please bear with me. So what we're going to be going over in this video is the fact that AMC is still on the threshold list. We have Citadel essentially being investigated at the current time. There is some legislation coming in over the next couple of weeks that is really going to hurt companies like Citadel, and Citadel is actually specifically mentioned in this article. So this is all really important information, and I also want to go over this S-3 withdrawal and give my opinion on this due diligence piece, this really in-depth DD piece that was put out over the last couple of days on how these convertible bonds are being used to essentially short AMC stock and keep the price down. We're going to go over exactly how plausible this theory is, explain in the most simple terms what exactly this theory is doing to the stock, and how it benefits us as AMC shareholders that Adam Aron has withdrawn this S-3 filing. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot getting this information out to as many people as possible. And the more people that we have staying up to date with accurate AMC information, the stronger our community becomes. And if you guys would like to earn 2 free stocks with Webull, valued up to $1,850, make sure you check out that link down below in my description. So when we come over to the New York Stock Exchange threshold securities list, getting on the threshold security list essentially means that a company has had persistent failure to delivers for a given period of time, and when they get put on this list, if the failure to delivers are not essentially covered and closed out in a 13 settlement day time frame, if you do not close out those fails by that 13-day time frame, then you no longer are going to be able to open up new short positions on the stock. Now, a lot of people have been kind of really excited about this threshold list, and I do think that this is a step in the right direction, but again, I've said this in a lot of my videos, I do not believe that there is going to be essentially one specific thing that comes out about AMC or GameStop or any of these short squeeze situations that we have at hand that is going to be the deciding factor when we see this squeeze happen. Now, here is the Citadel situation. So we can see here, this article came out yesterday, June 30th, Biden's big business crackdown bad for Wall Street behemoths. So we can see that Ken Griffin's picture is listed right here, and down below, Citadel Securities founder Ken Griffin is expected to be a target of Biden's big business crackdown. This is very big news because we've seen in the past, we had some mix-ups with the Citadel in Ecuador being raided for market manipulation and fraud, and that turned out to not necessarily be connected with the Citadel securities that we all know and love. But this article right here is very interesting that our government is essentially coming in and providing some regulation. So we can see Biden's big business crackdown could be bad news for Wall Street titans like Ken Griffin, assuming the controversial effort makes it off the ground. The controversial order, which Biden can sign as soon as next week, would seek to bypass traditional antitrust enforcement actions by directing regulators to think their rules, to rethink their rules for how their respective industries, from airlines to internet providers, operate, according to the Wall Street Journal. What is essentially happening here is they're trying to create a fairer marketplace in the stock market. This is all I have really ever wanted to see ever since learning everything that I could about this AMC situation and just how crazy our market is operating with all of the different tactics that these large institutions can use to basically manipulate the price of a given stock. Now, we are finally seeing some regulation come in, and we can see here Griffin Citadel Securities would likely be a target in the market-making space, while BlackRock, the world's largest asset manager, Vanguard, and State Street may get a hard look in the asset management space, this person added. Now, here's what's kind of interesting about this. We know that BlackRock and Vanguard are essentially the two biggest funds in the world right now. Vanguard has a lot of different funds and ETFs that you can invest in, and BlackRock is considered one of the largest hedge funds in the world. BlackRock and Vanguard are also the number 1 and 2 institutional owners of AMC, and we know Citadel was involved in the GameStop and AMC rallies back in January. What some people do not know, however, is that BlackRock has about 30 individuals that are basically in the Biden administration. So I highly doubt that BlackRock would essentially let themselves go down just due to one of these investigations. But the fact that Citadel is mentioned here, along with all of the other key players in this AMC situation, is very interesting. So this is going to be a development that we need to keep our eyes on over the next couple of weeks. But again, this is going to take a long time to play out with this antitrust case if it gets off the ground. But in the long run, this could be a path to making our markets more fair. And it's a great sign to see that people in our regulatory bodies, whether it be our United States government, the SEC, FINRA, or even the depository trust and clearing companies, they're finally taking a look into how unfair and essentially unregulated our markets are at the current time. Now, what I also want to go into is this S-3 situation. Now, we've explained this briefly on my channel over the past couple of days, but I want to go a little bit more in depth into this situation and explain exactly what this means so you guys can fully understand how these convertible notes are actually used to push the share price of a stock down, and that is called death spiral financing. So we can see here, this is the original S-3 filing, 2.95% convertible senior notes due 2024, and the amount to be registered, $600 million. Now again, Adam Aaron has filed for a withdrawal of this S-3. If that gets approved, they are no longer going to be able to do these manipulative tactics that we are going to discuss for the remainder of this video. Now, we do have this really amazing due diligence piece put out by this individual right here. It's actually Big Gums, I'm pretty sure is his name on Twitter, but I am going to link this DD piece in the description down below for you guys to read if you guys would like to in your free time. It is pretty long and I don't want to go into every single thing in this video, but I want to make sure you guys fully understand what is going on. Essentially, what this type of financing could be considered as is death spiral financing. When we come over to Investopedia, what exactly is this? Death spiral financing or death spiral debt describes a type of convertible bond that forces the creation of an ever-increasing number of shares, inevitably leading to a steep drop in the price of shares. So if you are short AMC or any stock that you want to push lower and you can enter into these this death spiral financing agreement, you are going to be able to artificially push the share price of a stock lower just by due to flooding the market with more shares. Now, coming down a little bit further, as noted, a convertible bond can be converted to a fixed number of shares. The type of bond that is called death spiral debt, however, converts into a fixed value paid in shares. So as the stock price increases substantially, investors in conventional convertible shares are likely to seize the opportunity to convert their bonds into fast-growing stocks. However, a stock price decline motivates the owner of fixed value convertible bonds. They can get more shares of stock when they make the conversion, but this process, by definition, increases the number of shares in the market, and that forces prices even lower. Now, Wes Christian, he is a naked short selling litigator. He has had 2 interviews on the Super Stonk YouTube channel, and those are unbelievable to look at. He's also had an interview on Matt Korz's channel where I know he goes over death spiral financing, so those videos are unbelievable to check out, and he goes more in depth into how death spiral financing really played a factor into the naked short selling cases that he has prosecuted. Now, here is how pairing the convertible debt with short selling pushes the price of a stock even lower through something called a convertible hedge, which is definitely mentioned in this due diligence piece that we mentioned before. Now, we can see here that understanding the convertible hedge. Convertible hedges are often used by hedge fund managers and investment professionals. The rationale for the convertible hedge strategy is as follows. If the stock trades flat or if little has changed, the investor receives interest from the convertible. If the stock falls, the short position gains while the bond is likely to fall, but they still collect the interest. Now, when we think about before, where if the share price of a stock falls, you can basically convert that bond into more shares, flood the market with more supply, and push the share price of a stock down. These convertible bonds, these types of convertible bonds in this death spiral financing example, is a great way to push the share price of a stock continuously lower and lower, and then you starve it for capital. Now, we actually have some evidence of these bonds actually being converted into shares. When we come over to this individual's Twitter right here, Bishop, He's actually been one of the individuals who has been working on this DD. So shout out to this guy right here. He provides a screenshot, as we can see here, that we can see that a lot of these bonds are being converted into shares. Now, there is some debate about this right now on if this is actually going on, if they're converting into shares, but what's really going to tell us exactly what is going on with this situation is when that S-3 filing ends up getting withdrawn and approved by the SEC. If we no longer see these really unhealthy price movements in AMC, the obvious manipulation happening, that could then tell us that they were using these bonds in order to manipulate these stocks. So that is something that I'm going to be looking out for, and I think you guys should be looking out for as well. So that is going to conclude this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.